December 29th, 2006, London. A clerk in the British Treasury processes a payment that has been made every year for 6 decades. The check is written to the United States Treasury. The amount is $832 million. It is the final installment on a debt that began 60 years earlier, in 1946, when Britain borrowed money to prevent its people from starving after winning World War II. The clerk closes the file. The debt is paid. What the clerk does not know is the full story. $5 billion, double the principal. He does not know that before Britain even received the loan, it had already sold more than $12 billion in overseas investments at fire sale prices to American buyers. He does not know that Britain surrendered gold worth $4 billion, handed over strategic naval bases across the Caribbean, and dismantled the trading system that held the British Empire together. When every asset sold, every base surrendered, every advantage forfeited, and every dollar repaid is added together, the total wealth transferred from Britain to the United States between 1940 and 2006 amounts to approximately $450 billion in today's money. For comparison, the Marshall Plan, celebrated as American generosity to rebuild Europe, cost about $200 billion in today's dollars. America extracted more wealth from Britain alone than it gave to all of Europe combined. And Britain was the ally. Britain was on the winning side. This is the story of how the United States did not defeat the British Empire with armies, but acquired it through foreclosure. How America turned Britain's military victory into financial bankruptcy. How the terms negotiated between 1940 and 1946 transferred the wealth of the world's largest empire to the United States, not through conquest, but through contracts signed under duress. And how the mechanism used to strip Britain became the template for the International Monetary Fund, later applied to more than 80 countries. Understanding what happened to Britain between 1940 and 2006 is not just history, it is the foundation of the modern global debt system. In 1939, when Germany invaded Poland, Britain was still the world's dominant financial power. The British Empire covered a quarter of the earth. London was the center of global finance. The pound sterling was the world's reserve currency. Britain held $4 billion in gold reserves and $20 billion in overseas investments, railways in Argentina, copper mines in Chile, and major industrial holdings in the United States.
These investments generated roughly $500 million annually, income that financed Britain's trade deficit. But Britain had a fatal vulnerability. Unlike the United States, Britain imported more than it exported. As an island nation, it relied on imports for 60% of its food and nearly all raw materials: oil, steel, rubber, aluminum. When war began, Germany pursued economic strangulation. Submarines sank merchant ships, ports were bombed. If Britain could not import, Britain would starve. To fight the war, Britain needed massive imports from the only supplier capable of providing them, the United States. But America was neutral. Britain could buy American goods only if it paid cash up front and transported them itself. No credit, no loans. This created the trap. From 1939 to 1940, Britain hemorrhaged wealth. First, it shipped gold. In Operation Fish, Britain transported $2 billion in gold bars across the Atlantic, the largest movement of physical wealth in history. Next, it liquidated securities, forcing citizens to surrender American stocks and bonds, raising $1 billion. Then it sold overseas investments at fire sale prices, destroying the income streams that had sustained its economy. By the end of 1940, Britain was mathematically bankrupt. Winston Churchill wrote to Franklin Roosevelt explaining the crisis. Britain could no longer pay. Roosevelt understood that if Britain fell, Germany would dominate Europe. But American law and public opinion opposed direct aid. Roosevelt needed a mechanism that looked like a business transaction. The solution was Lend-Lease. Publicly, it was framed as neighborly help. Privately, it was a foreclosure. Treasury Secretary Henry Morgenthau demanded Britain liquidate every remaining asset before receiving aid. British negotiators were treated not as allies, but as a bankrupt company under audit. American-owned British assets were targeted. STD U.S. company owned by Britain. Morgenthau demanded it be sold. Britain complied. Because the sale was forced, American bankers bought it for roughly half its value. STD U.S. proceeds went to the U.S. Treasury. Simultaneously, Britain traded strategic naval bases across the Caribbean for 50 obsolete American destroyers. The United States gained a permanent military footprint across the Western Hemisphere.
Only after these concessions did Congress approve Lend-Lease.
Hidden inside the agreement was Article 7, requiring Britain to dismantle imperial preference, the trade system that protected British industry across the empire. Signing it meant surrendering Britain's economic future. Churchill agreed because the alternative was starvation. Lend-Lease kept Britain alive during the war, but when the war ended, the aid was cut off immediately. Ships carrying food were ordered to turn back mid-Atlantic. Britain, still dependent on imports, faced economic collapse. Britain begged for a loan. $75 billion, not a grant, but a loan with interest. The most destructive condition was sterling convertibility. Britain was required to make the pound freely convertible into dollars within a year. Economists warned this would trigger a run on the pound. They were right. When convertibility began, countries rushed to exchange pounds for dollars. Within weeks, Britain lost hundreds of millions. The policy was suspended, but the damage was done. Britain devalued its currency, surrendered global influence, and formally ceded superpower status to the United States. The loan itself was never forgiven, $5 billion. The final payment was made in 2006. The visible debt was only part of the cost. When gold losses, asset sales, lost income, dismantled trade systems, and strategic concessions are included, Britain transferred approximately $450 billion in today's dollars to the United States. At Bretton Woods, the same system was formalized. The dollar became the global reserve currency. The IMF and World Bank were established in Washington. Countries seeking loans would be required to privatize assets, open markets, remove protections, and accept foreign control, exactly what Britain had been forced to do. Britain helped design the system that finalized its own decline. Germany lost the war and was rebuilt with grants. Britain won the war and paid for 60 years. This is the hidden financial history of World War II. Britain did not lose the war, but it lost its empire, not through conquest, but through debt. And the mechanism that stripped Britain is still operating today.